G'day guys, and welcome to another episode of Euro Mining News. Today, Mawson Finland have brought out some news about an IPO listing that's been fully subscribed, and they're kicking off trading on the TSXV, so the venture market. Now, it's a bit of a complex backstory, so we'll jump into the episode today. However, you may have heard of Mawson before, due to the fact that they are big gold explorers both in Sweden and Finland, but they also own an asset in Australia. So it gets a little bit convoluted. So I'm just going to go into the background of that. So here's Mawson. As of 31st of October last year, they announced a restructuring plan to split into 3 separate companies to unlock shareholder value. Now, as part of that deal, one was the sale of this restructuring gold cobalt asset in Finland, which is this new vehicle which they've announced the IPO for today. That is Mawson Finland. Now, that was stage number 1 of this restructuring. Stage number 2, and what happened there is they basically sold it to a private company, the Springtide Capital acquisition, for 6.5 million Canadian. They then had enough money to keep furthering the project, drilling it out, getting more ounces, whilst they were getting ready to list this year on the public TSX market. So that's happened, and in the meantime, Mawson has also merged its Swedish gold and uranium assets with its 51% stake in Southern Cross Gold, which is an exploration project in Australia. So if we were to jump over to here, you can see this is Mawson Gold, and they basically have Sweden and Southern Cross within the one vehicle now. So the reason why they did this was the restructure was appropriate for the early stage development. So this was when Mawson owned Swedish assets, Finnish assets, and Australian assets for cost sharing and minimising dilution for our shareholders. The discovery of success means Mawson should now be restructured to release the value and make each separate project financeable in their respective markets. So that's the reasoning why they've done this. Now onto the IPO, which is an initial public offering. Basically, it's where you first float a company, more or less. So Mawson Finland closes IPO and announces a listing on the TSXV market. So they launched with 2,875,000 shares, each issued at $1 per IPO share, which then gave the company $2.875 million to start off with. Now, it's had to give a bit of that to the underwriter. So the agent received a commission of 6%, which is pretty standard. So that's nothing to worry about too much. But because this was an existing company before and it's been spun out, it's a bit of a complex structure behind it. Usually IPOs just issue the shares and then that's all that's available to the market. Whereas this one now will have 19 million shares in total that will go onto the TSXV market. And they will be trading under the ticket code of MFL as of Monday, August 19th, so tomorrow. Now, what they're planning on doing with this money is following through with the work that they plan to set out after this preliminary economic assessment, PEA, of the company's wholly owned Rajapalot property in Finland. So what is that asset? It's an exploration and development project. They've said it's orogenic style gold. It's got an inferred gold cobalt resource on it of 867,000 ounces and 4,310 tonnes of cobalt. Now, the gold's going at 2.8 grams per tonne and the cobalt at 441 ppm cobalt. Now, it's important that to know that all of this is in the inferred category. So none of it's up to indicated spacing and none of it's in reserve at this point. So it's all very low confidence ounces. And it's only at a PEA study. So it's quite low confidence at this point. However, the PEA has demonstrated economics of 211 million post-tax MPV at a 5% discount rate. Now, 5% discount rates on the lower side. The average of companies normally use is kind of between 7 and 8%. However, it's not unreasonable. A lot of companies do use a 5% discount rate. 211 million post-tax, pretty good. They haven't put the internal rate of return here. However, we have got it here. So the thing has got an post-tax IRR of 27%. So what I usually say is anything above 25% is getting into the economic realm, unless it's a very large project. Then it can actually have a smaller internal rate of return just because of it's got a longer life. So let's get 211 million. It's using a $1,700 gold price, which is very reasonable considering that the current gold price is sitting at around 2,500 US. However, the cobalt that they're using is $60,000 per ton, which is slightly unreasonable considering that the cobalt price currently is at 26,500. So it's more than double what it currently is. But the gold will offset that. They've said the all-in sustaining cost is going to be at only $824 per ounce, which is ridiculously low. That's if they can pull that off, that's going to be awesome, because $2,500 per ounce they'll be getting at current gold prices. 824. That's less than half. So they will be making money hand over fist if they can pull that off. Now, life of mine is 9 years to produce approximately 700,000 ounces over that time at 82,000 ounces per year. Now, we'll jump back into the announcement. So, like I said, it's all in inferred mineral resources, so none of this can be put into reserves. And here is basically the background. Exploration stage company chasing base metal projects in Finland. It has 100% interest in it, and that's about it from that. Now, a few other things I found interesting is, so this is the project, the Raja Palot. I know I'm killing that pronunciation, but one thing I like to look at with these bird's eye view plots is, so here they're showing gram meters. And what that basically means is it's the grams per ton of the intercept multiplied by how many meters that intercept was. So a good bench stick for that is anything above kind of 15 gram meters can be put into an open pit quite easily. But once you're looking at underground assets, which this is going to be, you want to be pushing above 20-25 gram meters intercepts to be economic. So in this regard, everything in the orange and above is going to be easily mined out of an underground scenario. So one of the things I like to look for is just continuity in these resource shells. So here you can see there's quite a nice continuity. Here you can see there's quite a nice continuity. This one down here, it's a bit all over the shop. There's no real higher grade following a trend. So the likelihood that that's going to get converted is much lower. And kind of same here. It's not following a trend. Gold mineralization always, orogenic gold mineralization generally always follows a trend which is running along a structure. So these ones are lower confidence for me. However, most of your ounces are coming from these three and they're showing quite good trends. So That's good to see. So that's about all from here. Cheers for tuning in, and we'll see what they do with that money and if they start smashing some holes into the ground. Cheers. You've been with John Franklin. None of what I've said today is advice. Don't listen to any of it and don't use any of it for anything. I'm just a geologist and expressing my personal opinions.